Okay, so the Fed met last week and they are going to raise rates, they said 6 times this year. What does that mean for you as interest rates are rising as a buyer, seller, just as a homeowner? Stick around and I'll tell you all about it. So rates are up just over 4% now. And you can see the last 2 years we've been spoiled with rates in the threes, even got down into 2% at a couple of different points. But basically, we're back to the pre-pandemic numbers as far as interest rates go. They're not crazy high, but we just got spoiled over the last couple years. If you look at the historic numbers, we are still lower than most decades, minus 2010, where it was just over 4%. But if you look back, obviously in 1980, we were way lower. Rates got over 12% then. So compared to the last couple years, yes, our rates are higher, but a 4% interest rate is still really good. So one of the questions I get asked the most is, well, rates are going up, so when are prices coming down? This graph right here shows you that the exact opposite happens every time rates went up more than 1%. Home prices actually went up, and it ranged anywhere from 2% all the way up to 13% in 2000 and 2004. So rates going up does not correlate with prices coming down. And we'll show you why in this next slide with the inventory issues. Inventory is down to 1.8 months worth of supply nationwide in 2021, meaning if no new homes came on the market, it would only take just over a month to sell all of the existing homes on the market. And you can see back in 2007, 8, 9, 10, there was inventory levels of over 7 months. Average, we're looking at 3 or 4 months worth of supply is decent. And right now we're down below 2 months worth of supply. So like I said, it's a supply and demand issue. So interest rates going up does not mean prices are going to come down. We're not in a bubble. The month's worth of supplies that we have right now is nothing like the last time there was a crash in the real estate market. So not as only is there a low inventory issue, the homes that are coming to market are selling super fast. So the number in green shows you that the number of listings that are carried over month to month, meaning the house sat for longer. Right now, if your home is accurately priced and marketed correctly, it should sell within the first week on market. And so you can see here that the number in green is continuing to shrink as we go on. So we have lack of inventory and the stuff that is coming to market is selling super fast. So experts are predicting that prices will continue to increase throughout 2022. The 6.1% is the average of all of the housing forecasters, and that's a nationwide number. So we know typically in Orange County, we're double the average. So does that mean we're going to see prices appreciate another 10, 12% in certain parts of Orange County? Most likely, yes. The second most common question I get is, should I wait to buy? This graph shows you that if you purchased at 350,000 in January of this year, over the next 5 years, you would gain about 90,000 just in equity. One, we know in Orange County, it's super hard to find anything at that low of a price point. So you're going to gain even more. Should you wait and rent? The simple answer is no. Prices are going to continue to appreciate and interest rates are going to continue to go up. So it's only going to get more expensive. If you're thinking about buying for the first time, you're renting right now, you should do it sooner than later if it makes sense for you. If you are not in your forever home and want to wait the market out to see if it's going to calm down, prices are going to drop, it's the experts are saying that that's not going to happen. So if you are wanting to make a move, the sooner you do it, the more cost effective it's going to be for you in the long run.